In this video, we're diving into how to form an LLC the right way as a lawyer or accountant, especially if you're running a solo practice or starting your own firm. What's going on, everyone? My name is Eric Hunsaker, and on this channel, we cut through the fluff to help you make smarter business decisions, especially when it comes to formation, structure, and staying legally compliant. Whether you're a brand new solo attorney or a CPA finally breaking out on your own, this guide is built to help you avoid costly mistakes and get your LLC set up the right way. What makes professional LLCs different? Let's start with a quick question that you might not even know to ask. Should you even form a regular LLC, or do you need a PLLC? The little P stands for professional, and it makes a big difference. Certain professions like lawyers, accountants, doctors, and even architects are regulated at the state level. So instead of a standard LLC, you might be required to form a professional limited liability company, or PLLC, depending on where you live. So what's the difference? A regular LLC protects your personal assets if your business gets sued or goes into debt. But for licensed professionals, most states say that you still can't limit your personal liability for professional malpractice, even with an LLC. That's where a PLLC comes in. It's a structure specifically designed for professionals, giving you the same basic protections as an LLC while following stricter rules around licensing, ownership, and who can be a member. Let's break it down. Step 1, check your state's requirements. Not every state allows professionals to form an LLC or PLLC. Some states like California straight up prohibit lawyers and CPAs from forming an LLC for their practice. Instead, you have to form a professional corporation, or a PC. Other states like Texas, Florida, or New York allow PLLCs, but only if every member is licensed in that profession. That means your spouse, business, partner, or investor can't be a co-owner unless they're licensed too. Most state bar associations and accountancy boards also have naming rules, ownership restrictions, and paperwork approval processes. Some even require you to get a letter from the licensing board before filing. The bottom line, don't file your LLC paperwork until you've checked with your state's Secretary of State website and your licensing board. Step 2. Pick the right name. This might seem minor, but naming your firm can actually be tricky. Most states require your business name to include your profession. That means something like Smith Law, PLLC, or Greenview Accounting, LLC. You usually can't use misleading names, and some states require you to list the names of the professionals in the company. It all depends on where you're practicing. Also, make sure that the name isn't already taken. You can check your state's business name database online. Once you've found a name that works, you can usually reserve it with a small fee while you prepare the rest of your documents. Step 3. File articles of organization, or incorporation. This is the official step where you create your LLC or PLLC. You file a form, usually called Articles of Organization or Certificate of Formation, with your Secretary of State. This document will ask for your business name, the name and address of your registered agent, your business address, member or manager information, a statement confirming your professional licensing if that's required. Some states also require you to submit your professional license number or a certification letter from your board along with the form. Now, fees vary by state, but usually they range from $100 to $300. Step 4, designate a registered agent. Every LLC or PLLC needs to list a registered agent. This is the person or company responsible for receiving legal documents on your behalf. You can technically be your own registered agent, but for most professionals, especially if you're working remotely or don't want legal notices sent to your home, better to use a registered agent service. They'll receive documents on your behalf and keep your info private, which can come in handy if you're dealing with sensitive legal or financial issues. Now, you can get started with the registered agent service, something like Northwest Registered Agent, or LegalZoom if you decide to incorporate your LLC or corporation through LegalZoom. We'll have links for both of them down in the description below. Step 5, draft an operating agreement. Now, this isn't required in every state, but it's a smart move, especially for lawyers and accountants. An operating agreement spells out who owns what percentage of the company, how decisions get made, what happens if someone leaves or dies, how profits and losses are split. For solo practitioners, it might feel unnecessary, but it helps show the IRS and banks that you're running a legitimate business, not just freelancing. And if you're forming your LLC with another licensed professional, this document is essential to avoid conflict later on. Step 6, apply for your EIN. Once your LLC or PLLC is approved, apply for an employer identification number, or an EIN, through the IRS. It's free and it takes about 5 minutes online. Even if you don't have employees, you'll need this to open a business bank account, file federal taxes, register for state taxes if needed, so make sure to use your business name and address, not your personal details. Step 7, get the right insurance. Forming an LLC protects you from business liabilities, but it doesn't cover from professional malpractice. That's a huge deal in law and accounting. You'll need malpractice insurance, E&O, to protect against client claims. You'll need general liability insurance for slip and fall type situations, and cyber liability insurance if you handle sensitive client data online. Some states or bar associations even require a minimum amount of coverage to stay in good standing. Don't skip this. A single lawsuit, even if it's bogus, could cost more than your entire LLC setup. Step 8, set up a business bank account. This is another must do. Mixing your business and personal funds is one of the fastest ways to lose your liability protection. The IRS also won't like it. Opening a business checking account under your PLLC's name. Run all income and expenses through it. No exception. You might also want to get a business credit card and accounting software like QuickBooks, Wave, or Xero to keep things clean. We'll have a list of all the business bank accounts and software that we recommend when it comes to finances in your new LLC down in the description below. Step 9. Stay compliant. Once you're up and running, your job isn't done. Most states require annual reports, renewals of your registered agent, ongoing licensing verification, franchise tax payments in some states. Your licensing board may also have rules around client disclosures, advertising, and co-ownership with non-licensed parties. Even your website might need disclaimers depending on your profession. Make a checklist, or better yet, use a compliance reminder tool or service so nothing slips through the cracks. Again, this is something that LegalZoom can help you out with. Common mistakes to avoid. Here are a few missteps that trip up new law and accounting firms all the time. Use a general LLC when a PLLC is required. Naming your business something vague or non-compliant. Having non-licensed partners as members. Forgetting to register with your licensing board. Skipping malpractice insurance. Mixing personal and business funds. Each of these can expose you to lawsuits, ethics violations, or even dissolution of your firm. So starting your own firm as a lawyer or accountant is a huge step, and setting up the right legal structure makes all the difference. A PLLC or LLC, where allowed, gives you a foundation to grow, serve clients confidently, and protect what you're building. Just remember, check your state rules, don't cut corners, and when in doubt, talk to a legal or tax pro who specializes in professional services, which you should probably know some if you're a lawyer or accountant. Now, if you want to get started with any of the products that we talked about today, or any that we recommend that we didn't cover today, you'll find links for them down in the description below. These are affiliate links, which means we earn a small commission when you use them at no extra cost to you. And these commissions really help support the channel and allow us to continue to create free content just like this. So if you end up using them, we thank you so much in advance. Now, if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss another video. Here on this channel, we make videos dedicated to helping new and existing entrepreneurs get started and succeed in business, so be sure to subscribe. Other than that, thanks for watching, and we'll see you here in the next video.